4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Well, we're kicking back into gear here as we start to see Q1 heating up in 2023. Bunch of data coming out today, bunch more tomorrow. Friday, we got the jobs report for December. Yeah, that's right. Jobs Friday. I know that it just turned into 2023, but it's about that time. And then next week, we got earnings season kicking off again. But we start today with the fact that the Federal Reserve is going to be releasing minutes from their December meeting at 2 p.m. today. Brendan, not expected to see anything groundbreaking here. They don't normally, tell us anything that we didn't already know after their, meetings. But everyone always looks at the minutes and gets all, oh, it's another thing from the Fed. Oh, we got to look at it, guys. It's going to be huge.
Well, I don't know about how huge it's going to be, but, I guess what it does is simply add some clarity, right? And, amongst other things, they'll probably be showing, some expectations a little bit because that have changed a little bit because, the last time around, I think what we saw when they had announced, 2.8. Now they're saying it's probably going to be closer to 3.1.
What number are we talking about?
Let's see, where inflation is going to be ending at the end of 2023.
For 2023.
Yeah.
Okay.
Yeah, this year.
So, yeah, I think when we look at what I would expect to see from the meeting minutes, it's going to be, and I'm paraphrasing here, a number of Fed participants believe that the interest rate rises that we've pushed through are beginning to have their effect. We believe it's prudent to begin slowing the rate of increases while inflation has begun to improve. There's still a long way to go. We remain committed to lowering inflation, until it's no longer a problem, blah, blah, blah.
There's a lot of blah, blah, blah there.
That's what I think we are likely to end up hearing here. So I think that in looking at the key story for the Fed this year, last year the major story was, hey, inflation's here and the Fed's not doing enough. That was for basically all of last year until the last month or two. That was the story.
Okay.
Hey, why aren't you doing more? What's the you got 8% inflation and you're not raising rates. You're still buying bonds. What's going on? This year, Fed funds rate up over 4% already. You've got a couple more rate hikes that are projected in early February and then in March. And so you're going to have the Fed funds rate somewhere, up in the 4.5% to 5% range by the start of the spring. And I think the expectation for most folks at this point is, hey, if inflation continues to improve as it has for the last 4 to 5 months now, if that continues through March, probably not going to be seeing more activity from the Fed because you really have the brunt of the housing season kicking into gear at that point.
Right.
And so you want to see how what they've done is impacting the busiest time of year for housing, because anytime we talk about, hey, December sales were way down, well, how many people
Big
are really
deal.
buying a house in December? Like, no one's like, yes, I would love to close on December 23rd. Please.
I love moving in the snow.
Can you move me on Christmas? Like, no, they can't, okay? So it's a really slow time of year. So even though you see like these seasonally adjusted rates of, this many units per year, it doesn't mean much, because on an actual, not seasonally adjusted basis, there aren't that many transactions that happen in the winter anyways.
Right. So what do you think? I think in this spring, there'll be a little bit of pent-up demand, but I think there's going to be some apprehension in that housing market. And I think prices, you will see it. I think you will see those, more folks having to drop their prices, more folks coming in, offering their houses at lesser prices. That's just my 2 cents. I think
so
that's what we're going to see.
Here's what we're seeing as of right now. And this is data from Altus Research from Mike Simonson, who we have on the show every now and then. And here's what we're seeing at the moment is currently, if you look at the actual price of closing transactions, not listings, but closing transactions, for the most recent week, they came in at $405,000 nationally. Now, that's up from a year ago at $365,000, so this is matching what we've seen from Case-Shiller and from FHFB or whatever the heck, FHFA. And so it's matching that, saying, okay, there's been 10% year-over-year increases. But when we look at the median price of new listings, not the actual transaction price, those are now flat year-over-year.
Okay.
And listing prices lead actual sales prices.
Sure.
And so to me, this suggests that as you get into the spring, and I've kind of put the crossover point somewhere between April and May, I think somewhere in that April-May range, your sales prices are flat year over year, and then you're going negative from there.
Okay.
So, again, this is based on everything that we're seeing out there, and this is not even getting into volume, where volume is now off, about 40% from your peak. At this point, you've gone from 6.5 million units being moved a year down to 4 million units being moved a year. And I think that you've got a real chance to get down to 3 million units a year.
And there's a real challenge, too, right? If you're in your home, and maybe it wasn't going to be your long-term home, but you got this really awesome rate, you're probably not going to choose to sell and take on, this new mortgage at, 6%. So I think, to your point, less homes being sold. Yeah, there's some disincentive to selling homes today as well.
And if you look at homes that are under contract right now, as of the last week of this year, there are 251,000 single-family homes that are under contract currently, meaning this is what you'll expect for, the actual sales volume,
right.
January, February. This time last year, 35% higher. Again, so this is saying that there are going to be further declines in what you're seeing from a transaction volume standpoint.
Okay, so that's year over year, but I feel like we were in a bit of a real estate frenzy for a bit, where folks were just throwing money at it. There was money to be thrown at it. There was tons of demand, households forming. But where would that relate to, let's say, 2019?
It's about 20% below there.
20% below. So that is pretty substantial.
In terms of volume.
Yeah, volume-wise.
And continuing to decline. So if you specifically look at new contracts, new homes that are going under contract, not new homes, but new contracts that are being signed, most weeks, even if you look at last year, just as an example, you had about 60,000 new contracts being signed a week at this point in the year. Okay. Most weeks, if you look at the busy season, you're looking at 90 to 100,000 contracts being signed a week. Right now, you're seeing about 25,000 contracts being signed a week.
Wow. Does not bode
There's
well
almost
for
nothing out.
The attorneys, doesn't bode well for the mortgage companies. Those are some tough numbers.
And this is the thing. So, again, let's say that you strip out 3 million home sales a year. Okay?
Yep.
Average home sale price is $400,000, because that's what it is right now nationally. You're taking out, that 5% that the agents get. You're taking out the fees that the mortgage brokers get, the fees that the attorneys get, the home inspector. You're taking out the amount that people pay for moving. Mm-hmm. Hey, you're moving into a new place. Okay, great. We're buying a new couch as well. Oh, gee, we moved in here, and there's always something you got to fix in a home that you move into. It might be small and just $100,
the paint.
Or it might be a couple $1,000 or something like that. Either way, so let's, you look at it and say, on average, my guess is that when you account for, all of the equity being pulled out of a house and everything as you're going through that transaction, you're probably looking at somewhere in the ballpark of like 10% of the cost of the home that you're turning over and kind of unleashing there, right?
Right, yes, okay.
If you got a place worth $400,000 on average, you're doing $40,000 per home. Again, that's between, the everything that I'm including there. You're talking about $120 billion a year in direct costs that are no longer being spent in the American economy.
So money that's not moving, right? That's what the economy is, when money moves, and you got $120 billion that's not moving from point A to point B.
And I think that's light, because there are plenty of people that'll go in and just spend $40,000 updating a kitchen.
Oh, sure.
Just alone. Yeah. So this number is probably light.
It is. Wow.
But so you go through this and you say, okay, now you start seeing why, hey, just doing something along those lines, now you're taking, a tenth of a point off of GDP just from that, and not even including all of the multiplier effects that you get. So this is why when we talk about housing, we always say that, hey, it tends to lead the economy because it's such a big driver of economic activity.
Chuck, you were pretty quick to say, all of the multiplier effects. I think we can't overlook that concept, which is, basically what Chuck's referring to is when you talk about a dollar moving through the economy, it's not a dollar. Because it moved to the next person, it moved to the next person, it moved to the next person. So the multiplyer's 3 to 4.
Yeah.
So it's, $120 billion. No, it's more like $350 billion that's not getting moved around in this economy.
So let's take a quick break. When we come back, we're going to talk a little bit about the old Fed chair, Alan Greenspan, and his thoughts on what might be happening to the U.S. economy this year.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network.
If you buy a new property, could you continue to maintain the costs of your current residence in order to become a snowbird? There may be some tax benefits to staying a bit longer in each year in a state like Florida, but if you don't have a sound financial plan, your winter may be spent watching the snow continue to fall. Hi, this is Chuck Zodda from the Armstrong Advisory Group, and if you're retired or getting ready to retire, these are just a few of the topics that we tackle in our new free guide called Can You Afford to Snowbird? Let us review your existing financial plan so we can offer some suggestions that may help you understand whether or not a snowbird is something you can afford to be. Call us at 800-393-4001 and request your free guide today. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators, 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
The Financial Exchange is proudly partnered with VA New England. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES.
Alan Greenspan, who presided over the run-up to the tech bubble, he says that a recession is the most likely outcome in the United States. And I'll quote from him, I don't think that what we've seen in the slowdown in inflation will warrant a Fed reversal that is substantial enough to avoid at least a mild recession. Your thoughts, Brendan?
I like the idea that he put in the mild recession, right? That's the most important aspect.
Yeah.
We've talked about that time and time again. You know, recessions are not all created equally. Recession doesn't equate to depression. Recession can simply be a mild slowdown that, painful for the people that it directly impacts, but it also doesn't have to be long-lived either, right? I mean, you could find yourself in, 3 quarters and out of it and on again to brighter days.
Here's what I will say about the prospect of recession. There's absolutely zero chance at all that the U.S. is in one right now. The Atlanta Fed publishes what they call GDP Now on their website. It's kind of an up-to-date, real-time prediction of where the current quarter of GDP is going to come in.
Okay.
And right now for Q4, Brendan, any guesses as to where the Atlanta Fed thinks that Q4 GDP will be as of this moment and the data that they've collected so far?
Where it will be Q4 2023.
2022.
Oh, I'm sorry. Okay, so
the quarter
where
that
it
just
has
ended.
Been.
So what they think it's going to come in at.
Jeez, I'm not sure where they're going to predict.
I'm just
at,
asking you what
2?
you think. Their projection right now is 3.9%.
Wow. That's a lot stronger.
Okay. And they break down, okay, here's the report that we got on Tuesday, and here's what that added or subtracted to our prediction. Here's the report we got on Wednesday, and here's what changed there. So say what you want about the U.S. economy, which was going through a tough time for the first half of 2022. I mean, you had back-to-back quarters of negative GDP growth, and again, if you wanted to subscribe to, the thought that, hey, that means that you're in recession, well, then by that logic, that means that you are not right now. And this is why I don't think that that's the best way to look at whether it's a recession or not. I think that the U.S. economy, regardless of whether it was a recession or not, was bad enough in the first 2 quarters of last year that you literally had less money to spend
Right.
than you did previous. You were
That's a really good
poorer
point.
in the aggregate than you were, even though you might have been making more and so on and so forth. You had so much inflation that it ate up whatever GDP growth you would have otherwise had. Right now, on the other hand, hey, inflation is moderating and the economy is still growing. And inflation actually is moving slowly enough that it is not overwhelming
Right.
all of your GDP growth. So I think the discussion last year about, hey, is this a recession or not, misses the fact that even in like Q3 when things were starting to turn up a little bit, things felt really bad for most of last year. But you start getting to, again, numbers like this, which are not sustainable, by the way. You're not going to see 3.9% GDP growth forever just because of where it actually has to come from. You're either more productive or you're having more kids, and we're not really doing either of those things very well these days.
That's up to you. You have to do more of the childbearing.
Hey, listen, I got one out there already,
All right.
so, and she's a little young to work at this point. We're getting there, but, it's big things are like, she said raspberry yesterday, and that was great,
That's pretty good.
So we're
now if
getting
you can
there.
just get her to pick the raspberries, you'll be in a good place.
No, she's good at that, too. She's
I'll
good
bet.
at that, too.
I'll bet.
Yeah. They're right at, like, eye level for it.
Child
It's just
level,
boop, boop.
perfect.
But I think that if we talk about, hey, is there going to be a recession in the first half of next year?
No.
The trajectory has to change pretty sharply,
Yeah.
pretty quickly, and those facts are not in evidence right now. So I'm on board with, yeah, I could see a recession of varying severity in the second half of next year at some point, but there's nothing right now that's pointing to an imminent recession as we speak this quarter.
No, and if you kind of look back, why did it feel so bad, Chuck, in those first few couple quarters of last year? It's because gas prices were so high. You had the price of groceries were shooting up, and you weren't realizing any of the raises you may have gotten, right? So your job, okay, yeah, it's time to give you a raise, but it wasn't as if you'd been collecting on that raise for a year, right?
No.
That kind of was something that as the year progressed, maybe you got a raise, maybe you got it towards the end of the year, or even you're building up your savings from that raise you may have gotten at the end of 21. It wasn't enough in those first 2 quarters. Now, I don't know about you, but I went and filled my gas tank the other day. I was feeling pretty darn good filling it up at, 310 or
I got
whatever
in
it
at
was.
291 the day before
291?
Christmas.
Nice.
291.
Now, that was probably old gas, and did you make it to your destination?
Oh, no, it was at BJ's.
Oh, okay.
They
all
always
right.
got the,
yeah, you get the good deals.
I got the little, you give it a little swipe and you're good to go.
Yeah.
But, which, by the way, I finally joined one of those like 2 months ago.
What, BJ's?
Yeah.
Okay.
I feel like I've been missing out for my whole life.
Oh, you haven't really been going to a BJ's or a Costco?
No.
Oh, you're in trouble. You're going to spend like 2 years just buying so much stuff that you probably would like to have but didn't necessarily need.
It's fantastic.
It is, but you have to limit it, because if you just keep going there, the next thing you know, you're going to be buying a flashlight and some speaker system that you
Like
probably
12
didn't
flashlights.
need. 12 flashlights. You're going to have one in every room.
Well, last week I bought, I think it was 1,200 napkins.
And
So
48 pounds of goldfish.
I'm good on those for a year and a half.
It's the food part at those are tough, right? If there's only the 2 of you and a little one, like how do you buy 14 pounds of steak and without having to freeze
I don't see the
it?
problem.
Yeah, well, you wouldn't. You'd probably eat it all in 3
They
sittings.
say that these are family-sized boxes, but I beg to differ. It's what size family do you have, So in any case, when we look at the picture for 2023, recession, absolutely a possibility, because anytime housing's this bad, usually you're heading there.
But here's a factor, Chuck, that we haven't really talked about that would certainly help to counter, recession, certainly in the first couple quarters, which is all of these bumps that people are getting.
All
through
these
their
COLA
Social
bumps.
Security.
I know.
COLAs. Minimum wage increases. A lot of them around the country are
Yeah.
tied to inflation. So there's going to be a big increase And I think there's a sum of money that is, I think it's like $200 billion more is going to be injected into this economy from all those increases.
So we will see if that has any impact on inflation.
We will.
There'll be something to watch as well. Quick break, Wall Street Watch, and Ask Todd are next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Can You Afford to Snowbird? Mike, there's a big list of different costs people have to account for if they're deciding to move to a second place for the winter. What types of things are on that list?
Yeah, certainly are. I mean, first and foremost are the obvious ones. The actual cost to go rent a place or own a second home and maintain that place throughout the year are going to be substantial, especially if you're going to a popular place during a popular period of time. If you're going to Florida from January through March, that's going to be a lot more expensive than snowbirding in Minnesota. I actually have somebody I know who spends half the year in Alaska, half the year in Minnesota. The other big considerations, though, when you are going down there, what type of vacation is this for you? A lot of people, when they go on a true vacation, they're dining out every night. If you're renting a place with a full kitchen, that might not be the case, and you could find some discounts there. Transportation, once you're in that location. Am I driving down? Am I renting a vehicle the entire time? And then what's it actually going to cost to maintain my primary residence while I am not there.
You can't just turn the heat off in the winter up here.
You cannot up here. And so you might be paying somebody to stop by the house on an occasional basis, the cost of plowing if you're not there to remove the snow on your own. So there are a lot of things that go into this that are just above and beyond the simple, can I afford the rental payment?
Our guide is titled, Can You Afford to Snowbird? And there are two different ways that you can request it. First, you can call 800-393-4001. Second option, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Time now for Wall Street Watch here on the Financial Exchange. And on the second trading day of 2023, similar ride to yesterday, where markets opened well into the green before reversing course and dipping into negative territory following the release of more economic data. Also at 2 o'clock this afternoon, Wall Street will also be sifting through the Fed's minutes from its December meeting. At the moment, all three major averages are mostly flat. The Dow is off by 3 points. The S&P 500 is ticking 5 points higher, and the NASDAQ off by 12 points. Russell 2000 is up by 14 points, or 0.75%, so a little bump there. 10-year Treasury yield is down by 8 basis points, now at 3.70%. And crude oil down 4% today, now trading at $73.84 a barrel. Salesforce is the latest tech company to announce job cuts, revealing this morning it will lay off about 10% of its employees and close some of its offices. The CRM and cloud software company anticipates the move to lead about $1.4 billion to $2.1 billion in charges, of which $800 million to $1 billion will be recorded in the fourth quarter of fiscal 2023. That stock is up by 2.5%. And Chuck and Brendan will have more on that story in the second hour of today's show. Meanwhile, General Healthcare Technologies will begin trading as a separate company on the S&P 500 today. And General Electric announced plans in 2021 to break up into 3 companies so it can focus more on its aviation business. Its energy unit will be spun off in 2024. That stock today is up by 7.5%, and Microsoft shares are down by 5% after the tech giant was downgraded by UBS to neutral from buy, noting worries over the company's Azure and Office businesses following a series of field checks. And one more update for you. Target shares are down by 1% after Wells Fargo downgraded its stock to equal weight from overweight, saying the retailer's outlook has deteriorated, where the stock is not an attractive investment due to broader economic uncertainty. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
And as promised, we're now joined by Todd Lutzke from the law firm of Cushing & Dolan for Ask Todd. Ask Todd is the segment where you get to ask Todd your questions. So we're going to open up the studio lines here at 888-205-2263. That is the number to call if you want to ask Todd Lutzke a question about your estate plan live on the show. Again, 888-205-2263. The last 2 shows, we have not been able to get to all calls, so please get calling early if you want to make sure you save your spot in line. Again, it's 888-205-2263. Todd, I'm going to ask you the first question of 2023. How are you?
I'm very well, thanks. And you?
I'm doing well. I saw this great story yesterday, and I thought of you. It was about a tiny frog that took a. They gave it a DNA test. Actually, did you see this?
No, I missed the frog DNA test.
It turns out that he was mostly German, a little bit Scottish, somewhat Italian, and a tadpole.
That's good.
So it was. I just thought it was a great story and that you'd appreciate it. So let's talk a little bit about estate planning and the idea of procrastinating. Talk to me about who's a procrastinator when it comes to estate planning.
I would say that's just people that don't pay attention to their situation, don't pay attention to their estate planning needs. But you know what? The problem with procrastinating is this kind of thing kind of sneaks up on you, right? And something could happen to you and you're just not aware, not ready for it because you procrastinated.
So when
like you could end up in a nursing home accidentally, right? And like, oh my gosh, I didn't realize you could have a stroke or something. And the next thing you know, you're faced with something that could have been prevented financially, that is, if you had done some planning in advance.
Those kinds of things, they can obviously happen to people at any age, but they tend to become more prevalent as folks get older. At what age do you think it starts making sense for someone to consider planning specifically as it relates to any kind of long-term care situation? Yeah,
and this is when I say things can sneak up on you like nursing home admissions. You don't see it much in your, up into your 50s, but when I see clients, I say, and there's no rule of thumb, by the way, but it's my own rule of thumb is, 60 and over. If you get to 60 and over, I think they walk in the office, I'm going to ask them, hey, is not only estate planning important to you, but are you concerned about protecting assets from the cost of nursing home care? I'm going to at least bring it up as an issue at 60 and over, simply because it takes 5 years to complete that process. And so, get that ball rolling and have this behind you by 65 or 70 is a great thing.
Talking with Todd Lutzke from the law firm of Cushing & Dolan. If you have a question that you want to ask Todd, this is your chance to do so. The studio number here is 888-205-2263. Again, that's 888-205-2263. So get calling. We're going to take a quick break, and then it is right to your calls when we get back with Todd Lutzke. Again, 888-205-2263.
Todd Lutzke answers your questions about estate and elder life planning every Wednesday at 10:30, right here on the Financial Exchange Radio Network. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com. You've worked hard to achieve wealth and prosperity. Don't let an unexpected nursing home stay take it all away. According to Genworth, the average monthly cost for a private room in New England could increase by up to 25% by 2030. If you or a loved one might need nursing home care in the near future, and you're not prepared to handle these kinds of costs, you need to call the experts at Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets that you've worked a lifetime to attain. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you buy a new property, could you continue to maintain the costs of your current residence in order to become a snowbird? There may be some tax benefits to staying a bit longer in each year in a state like Florida, but if you don't have a sound financial plan, your winter may be spent watching the snow continue to fall. Hi, this is Chuck Zodda from the Armstrong Advisory Group, and if you're retired or getting ready to retire, these are just a few of the topics that we tackle in our new free guide called Can You Afford to Snowbird? Let us review your existing financial plan so we can offer some suggestions that may help you understand whether or not a snowbird is something you can afford to be. Call us at 800-393-4001 and request your free guide today. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
And Dolan first on deck. We've got Brooks on the Cape. Brooks, you're on with Todd Lutzke.
Yes, hi, Todd. My question is I'm going to be selling my primary home that's going to have a substantial gain, but I am going to be buying a new home. As I'm 60 years old, I plan on working for another 7 years, but should I be putting this home into a trust at this point in time that I eventually want to give what value is of the new home over to my kids when the time comes?
So, yes, this is a great and a perfect question because, 60, perfect age to be thinking about this kind of planning, not only from a dying perspective, but also from a long-term care perspective. So if the goal is to save this house or the next house, if you're going to buy another one or whatever house you end up keeping, if that is a big asset that you would like to, get to the next generation, then yes, putting it into a trust now is important. And I know you didn't ask this question, but you mentioned you're selling it, and it inevitably comes up when clients are asking about planning. It's like, oh my gosh, if I put my house into one of these irrevocable trusts to protect them now from the cost of nursing home care, probate, etc., and get it to my family, am I going to lose the ability to sell it? No, you won't. So you don't have to wait and say, oh, I'm going to do it 2 or 3 years from now, when you could have 2 or 3 years of that 5-year waiting period already behind you. You can sell from these trusts just the same way you could sell if it wasn't in the trust. And when I say that, from a tax perspective, you lose nothing as well. In this case, you said there's going to be a lot of gain built into this property. Well, that's okay. If you're married, you get a $500,000 capital gains exclusion today if you've owned and used it as your primary residence for 2 of the last 5 years. And if you're single, you get $250,000, and that doesn't change even if it's in the irrevocable trust. And then you can simply use the money in the irrevocable trust to buy the new house, the replacement house. And that buying and selling does not reset the 5-year waiting period. So you don't lose anything by putting the house in now. Instead, if you wait, and then buy and sell and then put the new house in, you've lost whatever that time is from the time you haven't put it in until the time you sell and buy that new house. So I think that should help you on this front. And yes, I would pursue getting that protection trust in place now to get this house over to your kids at some point. Again, probably not till you pass, and 60 is a great age. Folks, I mentioned that planning now is important for someone that age, because that really goes to what our guide is about right now. The guide is procrastination, long-term care procrastination planning. And basically what it says is that, hey, if you don't do something like this, you could end up in a nursing home and then running around last minute trying to figure out how to protect this house that Brooks wants to protect in advance. Way better. Advanced planning is always better. But we know that life gets in the way and people don't always do the planning that they want. And they're faced with last minute planning. Folks, don't write the check. Pick up the phone, get this guide, learn how you can do things last minute to save assets that you otherwise might not be able to, or in your own mind would be thinking you can't save when you're faced with nursing home care planning, and you either A, haven't done your planning, or B, there's always something left outside the trust even when you do your planning. So learn how to protect those assets last minute, folks. Get this new guide. 866-848-5699 is the number, or go to our website, legalexchangeshow.com. Download the guide there. One more time, the number 866-848-5699 or legalexchangeshow.com.
Todd, we've got another caller for you. Let's go over to Eric in Springfield. What's your question for Todd Lutzke?
I have a question about inheritance and mass health. Would that affect anything?
All right, so I might have to ask a follow-up question here because I'm not entirely sure. So you're saying somebody is already on long-term care mass health and is now inadvertently receiving a lump sum of money because someone died?
Yeah, my brother's on mass health currently. He's under 65, and then when my parents pass, it's in a trust, but he's getting half. So is that going to affect his mass health?
All right, so that's a very different question than an outright inheritance, but let me take a shot at it. I think I got enough information to answer both questions that are sort of built into this question. So let me unpack it here. One, you have an individual who, let's say, is already on long-term care mass health. I'm going to answer it generally for everybody here as well. If they're already in a nursing home and on long-term care mass health, and they outright, let's say this long-lost Uncle Billy leaves them, $100,000, is that going to throw them off mass health? No, it won't. There's actually a regulation that says the money you receive as a one-time lump sum, such as an inheritance, is treated as income in the month in which it is received. So it's not an asset for that 30 days. It's not going to bump you over assets off mass health. However, again, never try to apply for mass health on your own. And this is another reason why I tell people to do that. Do not apply on your own. At this point, what I would say is that you need to, if you get that lump sum, in the next 30 days, you need to move that money somewhere, either convert it into an annuity to change it into an income stream to keep that person on mass health, or you need to take it and put it into a pooled trust to also keep that person on mass health and protect it from the cost of long-term care. Now, there'll be a payback provision either way on that money, but staying on mass health is far superior than paying privately. Paying privately is at least 50% more than mass health. Like $15,000 a month versus $6,500 would be the difference. So make sure you stay on mass health. That's part one of the answer. Part two of the answer is, in this case, it sounds like your parents, Eric, left it in trust for your brother. Well, that's entirely different. So now we've got what is known as a third-party trust involved, and these assets are going to end up into that trust. Now, if that trust is drafted properly, like if they knew he was either special needs or was in a long-term care situation, and that trust says the assets are held in trust for the benefit of their son, your brother, and the trustee, let's say maybe that's you, the trustee can then make discretionary distributions of money, principal, or income that is built into that trust to him as needed in the trustee's discretion, well, then that's not going to interfere with his mass health benefits at all. Because it's a third-party trust, it doesn't matter that the assets are allowed to come out. They would only mess up his mass health benefits if it says they're required to come out. So discretionary distributions are okay in that third-party trust. Now, if you go look at that third-party trust and find out that it does say, divide and allocate my assets into as many equal shares as there are children, and then pay it out to my kids, well, then that's that required payout problem that I mentioned a minute ago. And that would likely throw him off mass health. And you're going to have to seek out an elder law attorney and see what can be done. Again, last minute planning techniques, right? That's what this guide is all about. Long-term care planning for procrastinators, or really long-term care planning in case something happens like this that you might not have been aware of or wasn't coming down the road right. So I hope that helps you in terms of how to handle this situation. And for all of you folks out there, last minute planning is still something that's available to you. So if you like, just call, get the guide, learn how to do this, 866-848-5699, or go to our website, legalexchangeshow.com.
Todd Lutzke, thanks again for joining us today. We appreciate it.
Always a pleasure.
The views expressed in this segment are solely those of Cushing and Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutzke has been presented by Cushing and Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. You've worked hard to achieve wealth and prosperity. Don't let an unexpected nursing home stay take it all away. According to Genworth, the average monthly cost for a private room in New England could increase by up to 25% by 2030. If you or a loved one might need nursing home care in the near future, and you're not prepared to handle these kinds of costs, you need to call the experts at Cushing and Dolan and get their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets that you've worked a lifetime to attain. Don't put off today what you might really need to do tomorrow. Call Cushing and Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com.
Some big topics coming up in the second hour of the Financial Exchange. China and the U.S., obviously not in a great spot in that relationship. How might that affect big tech companies like Apple, Amazon, Tesla over the next coming years? Also, we've got the JOLTS report for a couple months ago that finally posted this morning. We'll be talking about what's going on with job openings. And also, as Tucker mentioned, Salesforce, the latest tech company to announce some layoffs coming. We'll tell you where those layoffs are going to be and what it means for the rest of the industry in just a little bit.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing and Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract. right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing and Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing and Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
It's easy to imagine a move to a warmer climate for just a few months each year, but you need to have a sound financial plan in place if it's going to work. If you're thinking of buying a new place in Florida, you need to be sure you can afford another down payment. Perhaps you've thought about buying and then renting to a tenant, or maybe you just want to rent a place for yourself. Regardless of which way you decide to go, having a solid financial strategy is necessary. When it comes to snowbirding, there are a lot of moving parts. In this month's new guide, titled Can You Afford to Snowbird, we'll walk you through ways to make sure you understand how to build a strong plan that can take you away from the cold. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing and Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Can You Afford to Snowbird? Mike, the first decision that someone needs to make if they're trying to figure out if they should move to a second place is whether or not they should be buying or renting. How do they make that decision?
Yeah, it is probably the first one once you get past the idea that you want to get out of the Northeast in the middle of winter, in the middle of January. Once you've come to that conclusion, that's the next logical step. It comes down to a number of different factors, but the tough part about buying is that there's a lot of permanence associated with it. Not that you can't reverse that decision, but if it's your first time going and trying out a new space, oftentimes renting can be the more appealing decision there when it comes to spending some time outside of your primary residence. Obviously, you're not worried about the maintenance costs and everything else associated with it. All of that having been said, there is something to owning a piece of property, knowing that it's yours and knowing that you'll be able to return to the same place over and over again. You might have the best relationship in the world with the person who is renting you their home for those 3 months a year, but when push comes to shove, if that person needs to sell that property and move on to a different tenant, they're going to do so. So it requires some thinking and real consideration, especially if this is your first time making the consideration to snowbird.
Our guide this month is titled Can You Afford to Snowbird? And there are two ways that you can request it. First, you can call 800-393-4001. Second option, you can go and download it at armstrongadvisory.com. Either way, it doesn't cost you anything. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, get breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. You too can support our great American heroes by visiting financialexchangeshow.com/DAV. And now, it's time for the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's actually Chuck, Brendan, and Tucker with you, and we got a little bit of a bump up today in equity markets so far. Nothing big. I mean, the Dow's up 48 points, whoop-de-doo. The S&P's up 16, Yahoo, and the Nasdaq's up 30. So, 0.1% to 0.25% move upward in markets. Bonds, 10-year Treasury, also rallying today, back down to 3.69%, selling off 10 base, not selling off, but rather rallying 10 basis points from almost 3.8 yesterday. Oil continuing the weakness that we saw yesterday, down another $3.69 a barrel on West Texas Intermediate to 73.24. And we've got gold continuing to rally to start off the year. Second straight day in the green, up $17.60 an ounce to $18.63. So maybe this is the year that gold gets up off the schneid. And we've got crypto continuing to just flop around aimlessly for the last couple months or so, not really going in either direction after the FTX blow-up. Brendan, let's talk a little bit about the U.S.-China relationship, and specifically how it may be impacting some of your big tech companies. You've got Apple, Amazon, Tesla, all with major operations in China. And they also have, not so much Amazon, more Apple and Tesla. They've got significant demand for their products in China as well. And if that demand weakens because of continued strain in that relationship or weakness in the Chinese economy, you've got some problems if that's where you're projecting the growth coming from.
Yeah, I mean, as far as weakness goes today, my perception is it's less about the relationship and more about what's happening in the Chinese economy right now. I mean, they're, kind of where we were 3 years ago, where this pandemic is kind of, really showing itself and kind of acting out. And the Chinese people are saying, oh boy, we need to scale back. We need to be conscious of what this could mean for us. So, and as a result, I think that they're changing their spending habits. So in some ways, they're concerned about this pandemic and the effects that it's having. But in some other ways, they're saying, hey, we have a little bit more freedom here. And that freedom is resulting in a lot of folks spending money on travel instead of goods. So it's kind of like what happened here, right? We changed our spending patterns. We went from a lot of goods to more services, and it's the same thing that's playing out in China right now.
So this article from CNBC is talking an awful lot about the demand side of things, but I really wonder about the long-term issues with supply coming out of China. If you're depending on them as a major factory center and that U.S.-China relationship continues to worsen, is that something that you need to be worried about in terms of having too much of your production contained inside China? And based on the actions we've been seeing from Apple over the last couple of years, I would say that is very much a concern for them, because for the last 20 years, Apple was not particularly interested in trying to diversify away from China as a supplier. They just weren't.
Right, but they are now, right?
Yes.
I mean, that's happening. So it's, and I'm not sure that is, is it a direct result of the U.S.-China kind of geopolitical arena, or is it more just a pure business decision on, hey, here's what happens when you have all your eggs in one basket, regardless of, that specific country? We need to change that.
The other piece on China that is going to be interesting to watch is, I believe, and again, the data on this is, depending on the source that you look at, it differs just because we don't get any accurate data out of China. But by all accounts, sometime between either 2018, 4 years ago, and this year, China's population has begun to decline.
Yeah.
Okay, like actually decline. I'm not saying like, hey, they're having fewer births. I'm saying the Chinese population,
there's less people,
either already started declining 4 years ago,
yeah,
or is starting, now or any time in between. And that population, over the next 80 years, is actually projected to decline by about 40 to 60%, depending on the estimate.
Is it really that high?
Yes.
Wow.
Okay. Chinese population, as of right now in 2100, is projected to be between 700 million and 800 million people.
You're kidding me. I had no idea that, Chuck.
From 1.4 billion.
Yeah, that's amazing. Considering on the flip side, India is continuing to grow and will continue to grow, right? I mean, didn't they just eclipse China?
They may have. I can't remember. But if you want the country that already has a large population that is going to grow into one with a real global presence over the next 40, 50 years, what do you think it is?
Ask me that question again.
Country that's already large,
yeah,
that you would expect to kind of grow into that next major population center over the next 40 to 15 years.
Oh, who would that be?
Yeah.
Well, I mean, I guess I would have said India.
Tucker, any guesses? Big country that's going to, kind of be on, a real fast growth rate over the next 40, 50 years?
I don't know.
You'd have to have a lot of land mass. You can't just have people, right?
Nigeria.
Okay, I could see it. Yeah,
Nigeria's population by the end of the century is projected to be over 500 million people.
Okay.
Okay, so you're talking at that point, okay, Nigeria would effectively be the third largest country in the world behind India and China.
Oh, wow, that's amazing.
India would be the largest. Projected is somewhere around like 1.5 billion people. So again, pretty close to the levels they're at now. China, 700 to 800 million. And Nigeria would be the third largest country with a population of north of 500 million.
I thought, Chuck, we were going to let everyone in here, so we were going to end up in third. Are we going to let people in?
Are you talking in the financial exchange studio,
yeah.
or because we don't have space?
Don't we
in
let
here.
people into this country and we can grow like?
So U.S. population by end of century is projected to be around 400 million. So that's up by again.
So we're
again
330 now,
growing somewhere
400.
0.5% to 1% a year because basically again we're kind of replacement rate in terms of. Having kids, it's average number of kids families are having is 2 to 2.1. So it's basically parents are,
almost flat.
Yeah, you're not seeing any kind of population growth there. And you obviously have some big generations that are going to be passing. And so, based on that and the immigration that you do have, that kind of gets you that limited amount of growth. Other countries that are just, again, while we're on the topic, that are going to be, large in terms of populations at that point. The Congo is expected to double in population from 200 million to 430 million.
You're kidding me, really?
Nope,
Wow.
I'm not kidding. I'm telling you the truth.
I would not have guessed that they were quite so large even today.
Also, Pakistan expected to grow to almost 500 million people over that time period as well.
That I believe. That
So,
seems to be a very packed place.
Yeah, it's again just when you look at what the world is going to look like and where the growth is going to be. The story of, hey, I'm investing in China because that's the growth for the next 50 years. Yeah, that was true back in 1970.
Right.
Today, not really the case. And the question is, how much more are you going to get in terms of buying power from the average Chinese citizen? So I think that this is absolutely changing the calculus as far as how companies look at that market. Not over the next, if they're planning for the next 3 to 5 years, but when you're making the long-term, multi-decade strategic decisions that Apple is in terms of where do we want to produce stuff and, what are our key targets, I think that's a big reason why they're moving production away from China as well, as that's not the major market for them 20 years from now.
Well, I don't know, Chuck. I might have to disagree with you a little bit there, right? I mean, China has finally gotten to where they can, in the last 3 to 5 years say, hey, we're now a consumer based economy.
They're not, though.
They're not, right? But they're kind of getting to where that's their next phase, right? So they've developed their middle class.
What if it's not, though?
Well, but that's not really where they're going. You could say that, what if it's not? But where they're going is, and the reason why Apple gets 17% of their sales there, Tesla gets 23% of their sales, is because they actually have gotten to that point where, think about it. It was a gregarian.
Agrarian.
Agrarian.
You're getting there.
I knew the word.
You combined gregarious. If they were gregarious agrarians.
Happy farmers. They're gregarians.
Yes, they're gregarians. Very happy, hardworking farmers.
From where they were to where they are today, the development of the middle class, that's where that consumerism comes into play. I start to think then is, where would Nigeria fit in with that? They're many decades off, right? So you have to put your
again, Apple's not investing
concentration-
in Nigeria.
Yeah, right. You have to really concentrate your efforts when you can get the returns, and I think that is in the next 20 years in China.
But China's population is shrinking by 1% a year. So again, would you? If someone said, hey, you're going to invest in this country and their population is going to shrink by 1% a year. Again, the formula for GDP is simple. It's basically population in workable hours times productivity, and that gets you GDP growth. China's not a country that is going to have a growing GDP for much longer.
I believe that.
And so why do you...
Well, but the U.S., right? It's not as if we're hitting 7% growth rates, right? We're happy having those low single digits.
China won't be there. Again, how do you get to positive GDP growth with negative population growth? You have to have huge productivity growth. That's the only answer, or you got to work people more and more hours, and...
That's going to be hard over there.
It's kind of hard. They're already working pretty hard over there. Factory conditions are not good in China. We're going to take a quick break. When we come back, Greg McBride from Bankrate joins us, talking about their forecast for interest rates in 2023.
Stay in touch with the show by joining our exclusive text club. Text us at 617-362-1385 and use keyword Barry. Let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
If you buy a new property, could you continue to maintain the costs of your current residence in order to become a snowbird? There may be some tax benefits to staying a bit longer in each year in a state like Florida, but if you don't have a sound financial plan, your winter may be spent watching the snow continue to fall. Hi, this is Chuck Zodda from the Armstrong Advisory Group, and if you're retired or getting ready to retire, these are just a few of the topics that we tackle in our new free guide called Can You Afford to Snowbird? Let us review your existing financial plan so we can offer some suggestions that may help you understand whether or not a snowbird is something you can afford to be. Call us at 800-393-4001 and request your free guide today. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The latest news on inflation and how the markets are reacting every morning right here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. St. Croix, St. Thomas, St. John are the perfect place for your next vacation. Enjoy first-class resorts, exquisite cuisine, perfect temperatures all year round, and fall naturally in rhythm with the heartbeat of the islands. No passport is needed, and there are no more domestic travel requirements to enter. Come to America's Caribbean Paradise. Go to visitusvi.com to book your trip. That's visitusvi.com.
As promised, we are now joined by Greg McBride from Bankrate here to talk about their 2023 interest rate forecast. Greg, how are you today? Welcome to 2023.
Happy New Year. Thanks for having me.
Absolutely. What do you think is going to happen this year in terms of interest rates? Up, down, sideways? Where are we heading?
We're going to get mostly up, but a little bit of down later in the year. And the way that shapes up is I think the Fed going to continue the fight against inflation here in the first half of the year. I've got them raising interest rates another full percentage point here in the first half of the year.
Do you?
Yeah, and reason being, I expect inflation is going to come down, but maybe not as quickly as we expected. And the other thing is the economy, which has been very resilient to this point. I think that resiliency continues, and it gives the Fed, depending on how you look at it, whether it's air cover or just compels them to keep pushing up rates in the fight against inflation. What I don't have in the forecast is them then reversing course and cutting rates later in the year. They've been very consistent about saying that once they are done raising rates, that they're going to leave them there for a while because they want to not only get inflation down, but they want to make sure it stays low.
Here's my question, Greg. How come for the last 25 years, forecasters looking at the Fed always said, hey, they're going to raise this year, and they basically never did. We've all seen the charts of how, the Fed was very loose with monetary policy. Now the Fed is saying, hey, we're not going to cut, and so many people out there are projecting cuts. Why is it that it seems like no matter what the Fed is doing, no one wants to believe them for the last 20 years and in fact, say, okay, this is, actually what's going to happen?
The Fed has a real credibility problem when it comes to inflation and the idea of just tighter or tougher monetary policy. And a lot of that is a byproduct of those years and years of what you said, where just things were loose. Markets and the economy and everything was built on low rates, loose policy. But inflation was also low then, too. Inflation's not low now. So the Fed can't afford to be too loose. They have to err on the side of maybe being too tight in an effort to get inflation down. And nobody's really bought that message. And you look at markets last year, right? How many times did we see, the markets would rally for 3 or 4 weeks on this notion of a Fed pivot, and then Powell would come out, he'd throw cold water on it, and then markets would, tumble for the next 3 weeks after that. And we did lather, rinse, repeat on that a couple times last year, which again just kind of speaks to that Fed credibility problem. And listen, I was part of that crowd that I thought, they're going to cave. First sign of economic trouble, they're going to cave. I have to admit, they've been much more consistent about raising rates and talking about raising rates than I had expected that they would remain.
So obviously the Fed controls that short end of the yield curve, but when we look at the longer-term stuff, 10-year Treasury, 30-year mortgages that are based on those longer-term numbers, what are expectations for this year? Because it doesn't necessarily follow that just because the Fed's hiking, that those longer-term rates are going to move up.
Exactly, and they do tend to lead what the Fed is doing. And so I think it's going to be the tale of two halves. I expect a lot of choppiness in the first half of the year, kind of this roller coaster up and down on long-term bond yields and mortgage rates as we sort of assess all the incoming data on inflation, the health of the economy, the fact, the Fed's raising rates, how much, when are they going to stop, all that. But then the second half of the year, Fed being on the sidelines, likelihood of a weaker, if not recessionary, economic backdrop, that's when you start to see a sustained slide in those longer-term rates. And so as far as mortgage rates are concerned, 30-year fixed right now is about 6.75%. I see the first half of the year kind of the 6.5% to 7% neighborhood. But then in the back half of the year, starting that sustained slide and sliding fairly remarkably, ending the year down at 5.25%. So in the low fives in the latter portion of the year. Certainly a big improvement from where we are now, but that would still be 2 percentage points higher than we were this time last year.
Very good. Greg, appreciate you joining us today. Thanks so much for the time, and we'll be catching up with you soon.
Thanks so much. Appreciate it.
That is Greg McBride from Bankrate talking about their 2023 interest rate forecast. Brendan, anything that caught your ear, caught your eye at all?
No, I just think we should, make note of those interest rate projections. 5.5 mortgage rate by the end of the year, he says.
I could buy that.
Yeah, I could see it too. I'd be pretty welcome.
The other thing to keep in mind when it comes to housing, the Fed has already blown up the housing market. They've already done it.
It's just crumbling is what's happening.
It's starting
right?
now.
The explosion's happened, but it hasn't really fallen yet.
Where I'm going with this, it's really tough to blow up the housing market twice. Once you've ruined it, it's really hard to replicate the same thing because you're coming from such a low baseline. So unless you think the Fed is going to hike to the point where, mortgage rates are at 11 or 12% a couple of years from now, eventually the market gets used to, okay, rates are now at, 6 or 6.5, and then you move from there.
Right.
It's just that, the immediate aftermath is going to have some really bad impact on the housing market, but you generally can't ruin the housing market twice in 2 years.
Good point.
It just doesn't work like that. It's, how few sales can you get down to? Eventually, people just say, look, we got to move, so we got to do this, and the price is going to be what it's going to be.
Right.
So it's really hard to see a repeat of it immediately afterwards. You might see a malaise for a while, but will you see, sales decline by 50%, and then they decline? That's tough to do in housing. It's really hard to do there.
You've worked hard to achieve wealth and prosperity. Don't let an unexpected nursing home stay take it all away. According to Genworth, the average monthly cost for a private room in New England could increase by up to 25% by 2030. If you or a loved one might need nursing home care in the near future, and you're not prepared to handle these kinds of costs, you need to call the experts at Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets that you've worked a lifetime to attain. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Stream the show every day on the iHeartRadio app or watch the guys live at financialexchangeshow.com. We're breaking down the biggest business stories of the day only on the Financial Exchange Radio Network.
2022, not a banner year for U.S. auto sales. Projected to see sales totaling 13.7 million vehicles for last year. That's the lowest figure in more than a decade and more than an 8% decrease from the prior year. And combination of things, auto companies still sorting out their supply chains, and then you've got vehicle prices that have been moving up as well. And so if you're someone like me who, my car's 9 years old this July, I got 145,000 miles on it right now, and every winter I kind of go through, well, maybe this will be the year. I kind of look at it and I go, maybe I can get one more out of it.
Well, on top of the new car prices going up, Chuck, what they're going to give you for that 145,000 miles is much less now because used car prices are going on the downside. So it's kind of this double whammy for new car buyers.
Yeah, and looking at it now, again, we said there were 13.7 million vehicles sold last year. That's the expectation. We haven't seen final numbers yet. But pre-pandemic, you were typically seeing 16 to 17 million sales a year. So you're 20% below those levels. And here's the part that is concerning then. The only way that you get used car prices staying down long term is if you're producing enough used cars. Now, no one produces used cars. Ford doesn't go out and say, hey, we're going to make a great used car this year. But you got to sell enough new ones to eventually get out into that used car market. And if you have multiple years where you're selling 3 to 4 million fewer cars than you were before the pandemic, and you still have 260 million vehicles on the road and people demanding used cars, eventually you're going to find a bottom to used car prices.
Yeah, and it's hard because the new car prices, you're looking at paying $46,400 on average for a car. That's a lot of money.
Car buyers are dumb.
Are they?
I'm sorry, but car buyers are dumb.
You actually just insulted pretty much the whole country.
I insulted myself. Car buyers are... There is no world right now where the U.S. car market on average should be paying $46,000 for a new vehicle. You do not need to spend that much in order to get a car that will do everything that you want 99% of the days in the year. And then for the 1% where you got to haul something or tow something or this and that, rent yourself a truck and you'll be able to handle it.
Yeah, I mean, the trucks, I think, are those are big money. Do you see what they pay for pickup trucks or charge for pickups?
The average F-150, you're talking 60 to 80 grand now.
Yeah, that's crazy.
Okay? And look, there are people that need that every day. But it's not the person who's commuting into Boston that I see going, like, I see them sitting there and, like, their jacket and tie. It's like, you're clearly not going to the job site. You are not going to the job site. If you are, and, you're hey, great, you need it because you're towing, your landscaping equipment or this and that, I get it.
Yep.
That is, Ford is not selling 750,000 of those each year to landscapers. They're just not, okay? Especially the new Lightnings where they're, going to be selling 150,000 a year of them. Those are not going to, all be going to, construction crews and things like that.
Come to think of it, have those hit the market?
Oh, yeah.
Have you seen one?
I've seen a couple of
them.
You've seen the
yeah, they're out there.
Sure.
They started
really?
delivering in, I think, August or September last year.
Okay. I haven't seen one yet.
But here's what I don't understand, okay? And look, I'm someone, I do like cars. Like, I would love to own, a Corvette at some point. That's been a dream of mine for a while, but not now. But I look out there and I look at, a Toyota Corolla that you can spend $22,000 on.
Yep.
It's going to get you from point A to point B. It's going to have great gas mileage. You can fit your whole family in there. Like, maybe not if you have 8 people, but again, the American family's not usually 8 people these days. Okay. And if you need to rent a truck every single weekend, you save $26,000 on the purchase price between, that 46 and the 20 that you can use for rentals for weekends if you need to get a truck to, take your stuff from Home Depot or whatever.
All right, Chuck. So you started out by saying car buyers are, was it stupid or dumb?
Dumb. They
Same
spend
thing.
way
All right,
more
dumb.
money than they should.
Here's really where the issue lay, which is
Lies.
Lies?
Yeah.
They're
the
all
issue's
lies.
singular. The issue lies somewhere.
All of the issues lay.
What's the issue? How do they lie?
Jeez. If anyone thinks it's easy working with Chuck, I got news for you.
I don't know why you guys do it.
All right, so here's what it is. In the U.S., right? So if you go travel outside of this country, what you'd see is, for the most part, folks buy cars for transportation, right? You go to Europe. They're not really buying these fancy cars because they're not identifying themselves with the vehicle. They're saying, I'm going to drive from point A to point B in this vehicle, but it is not going to be my identity. In this country, to a large degree, we're using our vehicles as a part of our identity. And
yes,
as
we're dumb.
such, we're dumb.
We're dumb. There's a way to identify as whatever you want without spending $70,000 on a car.
Well, it's hard to do that, Chuck, in a Corolla if you want to be a Cadillac. It's hard. You can't identify as a Cadillac if you're driving
Isn't
a
there
Corolla.
a better way to signal, like, what kind of man you are than being like,
You could just...
I drive a Subaru. Like, what does that say about me? Who cares?
But this is where we are. Now, you can go on your, campaign to change the United States of America, the fact that we were built on automobiles, but this is who we are, and that's what we do.
But $46,000, the average American makes $60,000 a year, and you're telling me they're spending $46,000 on a car? Like, the numbers just don't make sense.
That's a good point.
It's just insane. That's the point that I'm trying to make. Like, hey, you want to drive a pickup truck? Great, get a used one for $15,000. It's not the pickup truck that I'm objecting to.
Yeah.
It's the price for it.
You know what, Chuck? 15 for a pickup truck? That might even be pie in the sky because, boy, even used pickups are crazy
Oh, yeah,
expensive.
I mean, you'd probably need like a 10-year-old Tacoma with 80,000 miles on it or something.
Yeah.
Like, I get it. I see what's out there in the market, but they exist.
But, you're touching on something here. I remember there was an article out there that talked about, if this, the pickup was causing some sort of retirement crisis. And, at least I kind of, it piqued my interest to think about this idea that you mentioned, the landscaper or the carpenter or the painter, he's having to spend $60,000 or maybe chooses to spend, $70,000 or $75,000 to get the real fancy. Is that money better spent being saved, allowing for that person to retire a little sooner? So anyway, that was a concept out there. I don't know that it really has legs.
No, and look, I'm completely unconcerned with the person driving the truck for work that wants to get something nice because that's your office. When you are using a truck for work, that is your office. So if you need it to be comfortable and have this, great. But if all you're doing is using it to get from point A to point B, then get a cheaper used one is my point. You don't need all the bells and whistles. Like I think about how much I appreciate like all those kinds of things in my car. And then I sit back and say, okay, so I'm going to think those are cool for like a month or two.
Right.
And then I'm going to be stuck paying for this thing for the next 5 years.
A new car is like cool for like 2 weeks.
The payments on a new car always outlast the feelings that you get from it.
Yeah. Yeah, then the first bill comes, you're like, oh, boy.
You know, like if you want something that you can feel good about and the bill takes about as long, get a Big Mac. If you want to feel better about yourself, get a Big Mac.
That just does
not.
Not.
Go to Taco because I'm dead serious. The good feeling lasts as long as it takes to pay for that thing.
The good feeling.
Go to Taco Bell, get 3 cheesy gordita crunches.
I guess you do feel like crap afterwards in both scenarios.
Exactly, but it's already paid for. It's done. It's $5. You're out. You didn't have to spend $60,000 to tell people that you're a man. Go spend $15,000 on a used truck. Like you shouldn't spend this much on cars.
And Chuck, you know what? Here's a good idea, right? If you are that person, you can buy a used vehicle and you can put a bunch of money into it.
Right.
And make it a nice vehicle that you won't have the heavy excise tax. You don't have the heavy sales tax. You can actually, there's 2 ways to skin a cat.
You're more of a minivan person? Great, buy a used minivan because Toyota Siennas are like $60,000 now also.
Did you say used minivan guy because Michael Armstrong was walking by?
No, I see him walking by, but I didn't even see him. But people spend the average new price for a vehicle in the U.S. should be closer to $25,000 than $46,000 because there are great cars that are offered in the 20s and 30s. People just don't buy them.
Yeah, that's a good point.
You can still get a Ford. Actually, no, they don't sell the Fusion anymore.
Fiesta, was that the one?
Well, Ford stopped making
that one, right?
Ford killed all of their
all the cars, really.
Yeah, it's only SUVs now.
Well,
right?
One of my friends just got a used Ford Flex, and they stopped making that, but it was still a nice purchase.
Go get a Honda Civic for $25,000. They're great cars.
Can you get one for $25,000?
Yeah, I mean it's not going to have leather seats and a moonroof, but whatever. Like you're driving, you're not looking through the moon
or the sun.
Whatever. Like, what's the fascination with moonroofs? You look how often do you drive and you're just
like them though.
Oh, that looks
I love
nice
it, and I
up
have
there.
to have one, and then I barely ever use it.
I feel claustrophobic without a sunroof.
You just cost yourself $1,000. Think about how many extra hours you have to work in a year to make that $1,000 back.
Well, you know what the biggest expense I think is that you don't use is the added GPS on your car. Like if you have to pay more and you already have it on your phone, why am I paying more to have it on the screen when I use my phone anyway?
Yeah, I get it.
And by the way, if you're a car manufacturer, I want every single one of you to have a spot on the car for my phone. I don't want to buy a separate thing to hold my phone. Please.
They should make that now, like cup holders.
Those should be standard.
I mean,
Come
come on.
Be
Why is
at
it
this
not
point.
standard? It's ridiculous. $46,000, and I got to buy my own phone holder.
There you go.
It's $15 probably.
It should come with the car for
You're
$46.
right. Yeah, you're right.
It should come with the car. Let's take a quick break. When we come back, it's Stack Roulette.
If you missed any of today's show, catch up whenever you want on the iHeartRadio app. Just search for the Financial Exchange for full shows and individual interviews. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network. You've worked hard to achieve wealth and prosperity. Don't let an unexpected nursing home stay take it all away. According to Genworth, the average monthly cost for a private room in New England could increase by up to 25% by 2030. If you or a loved one might need nursing home care in the near future, and you're not prepared to handle these kinds of costs, you need to call the experts at Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets that you've worked a lifetime to attain. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences, like the Crucian Christmas Festival on St. Croix from December 11th through January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Southwest Airlines, fresh off their meltdown, they are trying to sort through the mountain of ticket refunds and reimbursement expenses that they have to, give out to people. They're also kicking stranded flyers 25,000 frequent flyer points to people who were affected by the snafu.
Which is a really interesting thing, right? I'm kind of thinking about that. I'm like, okay, so you want to keep maybe your brand loyalty a little bit, but I don't know if Southwest necessarily has brand loyalty.
Oh, they do.
But it's like it's filling the future planes up more, lining themselves up for a bigger issue in the future.
Look, they figure if you have a good experience after the bad one, you'll forgive them and, move on. The issue that you're going to run into is that 25,000 points on Southwest oftentimes is not enough to book the actual flight that you want.
Yeah,
and
what does that equate to, like $250 basically?
Maybe, yeah, in that ballpark. So I think that number's light in terms of if you were someone trying to get somewhere for Christmas and you got stuck somewhere for literally 3 days before and 3 days after. What?
Well, they gave you your flight back. They paid for all of your food.
Yep.
Right? And then they gave you $250. What else do you want?
$300.
$300?
Yeah,
$350?
I want $1,000.
$1,000?
I want $1,000.
That seems pretty arbitrary.
I know.
So
I'm
it's
just saying.
$250.
I'm just saying it's what I want. Like it's $250 is not going to get you anywhere on Southwest.
It's like giving you a coupon, basically, right? hey, we screwed
Don't
up.
want one.
Here's
I want a free flight.
Here's a 50% off coupon.
I want a free flight, not just for me, but for. Here's the thing: is it 25,000? If I've got 4 people in my family, are they all getting 25,000, or is it just me who booked the ticket?
No, it's just you.
No, it's all of you.
I don't know.
No
it's
way.
all of you. Oh yeah, I'll betcha.
I don't know.
Should be all of you.
But I want $1,000. I want $1,000 from Southwest if I'm stranded. Just saying.
All right.
The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, and any one of their incredible experiences like the Crucian Christmas Festival on St. Croix from December 11th to January 7th. Visit usvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean Paradise. Visit usvi.com. That's visitusvi.com.
And Brendan, just my other point on this, if you've ever been at an airport and they've overbooked a flight, and they start trying to get people off and just onto, hey, we have another flight in 3 hours.
Yeah, big
they start giving $250, $500 pretty quickly just to book back a few hours.
Mm-hmm.
If you made me miss my flight by 7 days, I want more than $250.
Yeah, all right.
So
yeah,
I'll stop there.
Particularly because they're only points, right?
What do you got for me?
All right, according to the Wall Street Journal, more bosses are ordering workers back to the office as this job market shifts. So companies like Vanguard and Paycom, not only are they directing employees to get back to the office, but in some instances, they're telling them, come back or that's it for you. You're gone, and we're not giving you any sort of severance, by the way, on your way out.
This feels odd to me.
Odd in what way?
Well, here's where it feels odd. You're potentially heading into a recession.
Yeah.
And one of the levers that you have available to you in order to reduce your spend as a company is reducing your footprint rather than reducing your headcount.
Okay. Yep.
And so if I were a company, I would be less focused now on, hey, let me get everyone back in as the labor market weakens, and more on, gee, if the labor market is weakening, maybe I can actually staff up while still slimming down my overall expense profile and get more people in, qualified people who are leaving other firms and grow because I'm able to manage my expenses better.
Yeah, well, here's the thing, and I predicted this way at the beginning of this whole work from home thing. It's trendy a bit, but ultimately, as many businesses find, it's not as ultimately effective. I'm not going to say efficient, but it's probably not as effective because you don't get those informal conversations. I heard it over his shoulder. I've picked up on something. I learned something new. I'm able to train people better. There's a lot of positives that come from employees being right in the office. Management is seeing it, they recognizing it, and they're calling their cards.
Taking a look at markets as we head toward the top of the hour. The small rally that started off the day has now turned into a bigger rally, which is always fun. A lot of green on the board. The Dow is up 249 points now. S&P's up 46, and the NASDAQ up a whole 120 points. So you got 3/4 to full 1 1/4% rally going on here. Bonds, the 10-year Treasury is at 3.7 currently. Oil continuing its sell-off, down $3.51 a barrel to $73.42, and gold up $19.30 an ounce to $18.65.40. So, day one of 2023, kind of forgettable, a little bit down. Day two, hey, maybe we're getting into action now. But, again, all eyes going to be on the jobs report on Friday, and then we are right into CPI next week, earnings season, so it's going to get busy in a hurry, and we're going to get a sense of what is going on in this economy pretty soon. We are done for the day. Not for the week. Today is, I always get thrown off on these short weeks. What day
Wednesday.
is it? It's Wednesday.
Tomorrow's Thursday.
We got 2 more to go?
Correct.
2 more to go. Okay. In any case, we will see you back here tomorrow on the Financial Exchange. Have a great rest of the day, and we're back at it tomorrow.